Yo, what's going on, guys? This is going to be a little bit of a shorter video today, but today we're going to be going over um, like micros, minis, whatever you want to call it. Um, but yeah, so let's get into it, shall we? Let me pull up TradingView real quickly. Is my TradingView not open? Bro, I did not mean to open Minecraft. Bro, I literally just opened Minecraft, bro. All right. Um, Come on, bro. Why is it doing this? Why is it doing this? All right, cool. So, today we're going to be talking about risk management. All right, so risk management. So, what is risk management? So, risk management. Risk management allows us to keep ourselves in check with our capital slash funds, whatever. So pretty much the reason why we need risk management. So this is a very core aspect of trading, right? Is risk management. Without risk management, we don't have trading because we need it. It's essential. It's the only reason we're allowed to make money in the markets because at that point we're just gambling. Without risk management, let me just make this more neater. So, without risk management, we are gambling. So, we need risk management, all right? Because trading isn't gambling, all right? If you do not have risk management, if you do not know how much money you're going to lose on this trade that you're placing, you are gambling. You're a gambler, all right? So, what this allows us to do is it allows us to not gamble, right? Knowing what we're going to lose, knowing if we're okay with losing it is going to tell us, hey, this is how much I'm going to lose. Am I okay losing this? Okay, cool. So, let's place a trade, right? So, for example, I took this trade earlier. So this trade, I entered in right here, right, and we got out up here. So this trade allowed me to make about $400, right? I made $400 on this trade. I mean, I made 399 technically, but I made $400 on this trade, and it's nice, right? So what is this? A 1.38 RR. So that means that my risk for this trade would probably be about, I don't know, maybe like $300. So I would have lost $300, but I would have made $400, right? And I already told you guys about this, but there's pretty much RR, right? So RR is your risk to reward ratio. So, for example, right here, let me move this lower. Let me make this a 1-to-1. So that's a 1-to-1 right there. And this should be a 1-to-1 as well. So, right here, right? We see these right here. So, these are both 1-to-1s. So this means that when we get in right here, if we got into a trade, where is it? Bro, can I get this? So if there's a candlestick right here and we close right here and we get into this trade in this exact moment right here, and this where this line is, um, we would be making whatever we're risking. So once price reaches up here, we would make whatever we risked. And if price touches here, then we would lose whatever we risked, right? So let's say we risk $500. So let's say we have $500 on the line. Then if we were to go up here, we would make 1,000, right? Well, we would have 1,000 afterwards. So we would make an extra $500 if price went up here. Now, if price went down here, we would be losing $500. So say goodbye to those $500, right? So that's pretty much a 1-to-1. Let's say we're risking 500 on this. We make an extra 500 if we get up here. If we go down here, we just lose 500. And That's pretty much the same with a one-to-one like this, right? That's going short. So if we're longing, we're going to make money on the market going up. If we're shorting, we're betting on the market going down, and we're going to make money on the market going down. So we reach up here, same concept applies. 500, you'll make an extra 500 if the price reaches down here. If price reaches up here, then you just lose money, right? You lose 500. But yeah, pretty simple stuff. And now you're asking, okay, uh, Eddie, how do I manage, like, how do I know what I'm risking, right? Like like how does this work exactly? All right, let me teach you. Hold on, let me check a setting really quickly. All right, because I want to make sure I'm not uh, paper trading. All right, so for example, so there's going to be things called minis. So there are two, I guess there are two ways to, I guess I don't really know how to word this. There are two things, right, that help us understand how much we're risking. So there's minis and then there's micros. So now you're wondering, what is a mini and what is a micro? Well, a mini is just 10 micros. A mini is 10 micros. And a micro, well, it's just one micro, right? There isn't really anything below a micro or that's smaller than a micro. So 1 micro equals, well, it's 1 micro, so 10 micros equal 1 mini. And minimum, you can't go below this. You can't do like a 1.5 micro, like a 2.5 micro, 7.5 micros. No, it's 1 micro or 1 mini or 2 minis. Like there's no like 0.5s, there's no decimals. It's just a micro, right? Or 3 micros or 4 micros. So, um, so a micro is usually just 10 times smaller, right? So if we see that a mini is 10 micros, that means that whatever a micro is, that means it's 1/10 the size of a mini. So let's say a mini, you're risking about, it just really depends also because there's also points, right? There's points, and let me see. There are also points which factor. Dude, I can't spell. Oh my gosh. How much profit you will make. So you won't always risk the same amount, right? Because each trade will always be different. Some trades will look like this, right? They will look like this, or some trades will look more like this, right? Like you don't know how much you're going to be risking, but the micros and minis will help us, right? The micros and minis will help. So, for example, like this trade, I could be risking, I don't know, maybe like $200, $300, but I could be making like about, I don't know, like $500, $600, right? Or this trade right here, it really depends on the points, guys. It's more dependent on the point. So right here, the way we find out the points is um, right right up here, right? So these are the points. These are the points right here. So this is 70 points right here that we're losing, and we're winning. And right down here would be 70 points we're losing, or 46. Sorry, I'm stupid, bro. I'm sorry, guys. I don't even know what's going on with me today, but yeah. So we can change the stop around, see how many points we're losing. So it's all dependent per point, right? So for minis in this case, minis is $1 per point. So a mini is, or no, sorry, $5 per point. $5 per point. per point. Mini is $5 per point. So the way we can find that out is 70 times 5, right? So if we are targeting 70 points, whatever 70 times 5 is, I don't know if there's a calculator on here. Is there a calculator? Bro, there should be like a calculator somewhere around here. Dude, I swear there was a calculator, right? All right, so we're just gonna do it on my phone, right? So, mini's $5 per point, and a micro is, I believe, $2 per point. Micro is $2 per point, right? I believe so. Hold on, let me fact check myself real quick. How much is a micro per point on NQ? Yep, $2. All right, and a mini, just double checking myself. Oh, wait, never mind. I lied, guys. So each point is $20. I'm stupid. I don't know why I put 5. Dude, I don't even know what's wrong with me today, bro. It's $20 per point. I'm really stupid because I literally said it was 1/10 the freaking. I think I was thinking of 0.25. So a 0.25 move would be worth $5, but yeah. So it is 20 points, $20 per point. So for example, right here, if let's say we're gonna target 50 points, right? So 50, right? So let's do a 50 points. So if price was right here, right? If price was right here, we get an IFEG, we enter right there, and we target these highs, right? So that means that whatever, so these are 50 points right here. If we're trading 1 micro, what is $2 times 50 points? So this would be a $100 trade, right? So this would be a $100 trade right here. But now what if it was a mini? So a mini would be 20 times 50 points, right? So in that case, that would be $1,000, right? So this would be 100, this would be 1,000. So very big difference. So that's why minis are very important, because a mini and a micro, knowing the difference between the two, could be the difference between you making 1,000 and making 100. But that's the thing though, is like you don't want to think about the money, because yes, this 1,000, like, ooh, making 1,000 sounds nice, but how would you feel if you lost $1,000? Not very good. So you also gotta make sure you keep your emotions in check, and you probably want to risk the 100. So usually my risk size is, I'll do, let's say you're on a 50K account, right? You have a $50,000. You want to risk 1% of that. So usually you want to risk 1% of your account, whatever it is, maybe 2% max, all right? 2% max, but one of these two, right? You do not want to be risking more than 1 or 2% of your account. And that's what prop firms help us with. It helps us not use our own capital. But yeah, so anyways, how much should you be risking, right? Well, I would say for beginners, just risk anywhere from like 3 to 4 micros. 3 to 4 micros. Maybe I should type that out. 3 to 4 micros for beginners. So I think this is a very good area if you're learning how to trade. It's enough risk to keep you in check, you know, but it depends. You don't want to be using your own personal funds. You just want to do this paper trading, right? You want to paper trade 3 to 4 micros. So once you start trading 3 to 4 micros, maybe 2, you know, maybe 2, gets you used to kind of how much the money moves, right? And yeah, so with this 2 to 4 micros, you'd be risking anywhere from $200 to $500, right? It depends on the trades, but usually it'll be around $200 to $400, 500, whatever. But yeah, it's not gonna be a lot. I mean, I guess it is a lot, but it's not gonna be terrible, right? It could be worse. Could be worse. But you want to keep yourself. So I guess my general rule is, let's say, um, if you're on a 50K account, right? You're on a 50K prop firm account. Um, Usually these have very like strict rules sometimes. So what I do is, if you have a $2,000 worth of drawdown, right? So that means you can only lose $2,000 on that account before you lose the account. That means that you want to have 1/10 of that risk, right? So divide that by, you know, 1/10. Like you want to have 1/10 of that. So 1/10 of that would be $200, right? So, bro, why is this not working? So divide that by 10. All right, so now you get 200. Hold on. You get 200. Dude, this is terrible. I'm sorry, guys. I literally like um so if you only have $2,000 worth of drawdown, divide that by 10 and you'll get $200, right? You get 200. Let me delete all these things, because I kind of want to make this more neater looking, and I'm making this look kind of ugly. But you want to have $200 worth of drawdown, right? So you don't want to lose more than 200. If you go a little bit above that, it's okay. Just make sure it's at least on estimate $200 that you'd be losing per trade, right? And I think that's the best way to start for everyone. You know, you want to have some simple rules. So whatever your drawdown is, if you're on a prop firm account, because my prop firm does not allow me to lose more than 2,000. If I lose more than $2,000 on that account, I'm done. And we don't want that, right? We want to survive. We want to trade for the long term. We don't want to trade for the short term, right? We're trying to make money here. You're trying to not risk a lot, right? You want to at least have you want to have 10 chances, right? Imagine being able to lose 10 trades in a row before you're out, right? I mean, that sounds really nice. You don't like, would you rather lose 5 trades in a row to lose your account, or would you rather lose 10 trades to lose your account? Probably 10, right? Because I mean, you're going to have more uh you're going to have a better way to get back up from that, right? The 5 trades, yeah, like, it's going to suck, you know? You don't have as much room to breathe if you have a bad week. So that's what it prevents us from doing, guys. It prevents us from having bad weeks. If we ever have a bad week or have a bad month, we're okay, because we're going to know, okay, I have to lose 10 times in a row, but I have a 80% win rate, 90% win rate, 70% win rate. So it's okay. I know I'm going to come out on top because this is just a temporary setback. And I think having those 10 trades, having that mental note of being like, okay, if I lose, I have to lose 10 trades in a row in order for me to lose my account. I feel like for me, I would feel so at ease knowing that, because that's 2 weeks of losing in a row every day, $200. How likely is that going to happen? Probably not likely. So, but yeah, that being said, guys, like, you guys gotta think that way, all right? So, I think that's pretty much it. I don't know if there's much more things I have to go over, but yeah. So risk management. We got to make sure we have risk management in place to keep us from gambling, to protect our funds, to keep us trading for the long term. 2 things help us understand how we are risking. We got minis, we got micros, and then we also got points, right? The points will factor in how much we're going to lose, mainly. Like, these are just kind of like what we're risking, but these will, I guess, you guys kind of have to figure out, like, how many points are you risking per trade, right? And yeah, I mean, right here, we'll know the target. If you see the target up there on the green, it teaches us, and then the stop right there, 22. So we're going to lose 22 points, which is 22 times two micros if we're trading micros, or $2 per point, I guess. So that'd be like what, like $44. So if we're trading one micro and if we place one micro on this trade right here, we would lose $44. But if we won, we would make $100. So pretty much like that. So if you're ever trying to figure out how much your money you're going to lose, just figure out how much points your average trade is and then multiply it by a micro or mini. But in this case, we're going to be doing micros because we don't want to lose a lot of money at first, and we're probably going to be trading with prop firms, so we want to pass those accounts, right? We want to be consistent. So micro, $2, right? We need to trade micros. So yeah, 2 to 4 micros. I recommend 2 at first, and then once you get more comfortable, 3, then 4. And yeah, so yeah, I recommend $200. But yeah, that's pretty much it, guys. Don't gamble. Just don't gamble, all right? That's the hardest thing. We need to really keep these rules in place because these rules okay, so there's another thing, right? So we really need to keep these rules in place because we need to build confidence. So your goal at first isn't to make a lot of money, all right? We need to build confidence. The confidence is key because when you can build a lot of confidence, when you build confidence in trading, we tend to be better traders and make less irrational decisions, right? So the reason why we also have these risk parameters in place is because if we lose way too much money, we're gonna get mentally messed up. All right, humans are not meant to lose that amount of money. We just aren't built for it. All right, we're not built like that. No human is, and only like traders that have a lot of market experience really have that. So you don't really want to be messed up mentally, all right, guys? You guys are trying to build your confidence. That's one of the most important key factors in trading. Confidence is key, guys. I'm telling you, like, when you get confidence, you can make a lot of money, all right? So we really need to keep these rules in place because we need to build confidence. When you build confidence in trading, we tend to be better traders and make less irrational decisions. So yeah, our goal is to be good traders, to make good decisions, because being a good trader means making good decisions, and making good decisions also allows us to be good rule followers, right? That's another thing with trading is good traders follow rules. Good traders follow rules. So never go above this, right, guys? Always stick to your goal. If your goal is 2 micros, or that's 3, 2 micros, stick to that rule, all right? If you're trading with 3, stick to that. If you're trading with 4, stick to that. Don't go past these, all right, guys? Stick to these until you feel more comfortable, until you feel like you're just too good to be trading on this. When you're like, oh my gosh, I deserve to make way more because all I do is just win on 2 micros. Like, why am I not winning on 3 micros if I'm just winning on 2 all the time? All right. Once you start feeling like, wow, I'm doing so well. I've been trading 2 micros for like I don't know, like a month, and I've had a green month the entire month, and I followed all my rules, and I did all the things I should have. All right, move to 3 micros. And then once you do that, move to 4 micros. Once you have a profitable month of 3 micros, you just keep moving on, right? So, yeah, that's pretty much it, guys. I'm probably going to head out now. But yeah, I feel like I've pretty much said everything here. So, yeah. Be good risk managers. One of the most important aspects of trading. I feel like I didn't really emphasize that enough. But guys, genuinely, risk management, good psychology, following your rules, your strategy, guys, just all of those things will take you so far. Like, I'm not even joking. But anyways, I'm gonna head out now. Thank you guys all so much for watching. If you did enjoy, make sure to leave a like, subscribe. if you want to watch more videos like this, uh, subscribe to me. And there will also be a video that you might be interested in here. And if you want to watch more of the boot camp, it's going to be right here. But yeah, I also have a free Discord down below. So if you want to join that, there's free PDFs, free help, everything. I live stream every day from 7:15 a.m. at Mountain Standard Time to 8:30 Mountain Standard Time. And I just have a lot of free PDFs and good documents and stuff in there for you guys. So if you guys are interested in that, let me know. Or just click down below. Also, you can follow me on my socials. But anyways, I'll see you guys later. I'm out. Peace.